All right, let's talk about a powerful financial tool that the world's biggest companies are using to really get a handle on their risk. It's called captive insurance. Now, I know it might sound a little complicated, but stick with me. By the end of this, you'll see how it can be an absolute game changer for controlling your business's future.
You know the feeling, right? If you're a business owner, this one hits home. Those huge premiums for coverage that feels generic. The endless waiting when you actually need a payout. And that nagging feeling in the back of your mind that you're not even covered for the things that really keep you up at night. So what if there was a completely different way to do things?
Okay, here's how we're going to break it all down. First, we'll talk about the frustrations of traditional insurance. We'll call it the insurance trap. Then we'll introduce a totally different approach. We're going to look at how it actually works, weigh the pros and cons, walk through a real-world example, and then finally help you figure out if this is a move that could make sense for you. So, first up, the insurance trap. For a whole lot of businesses out there, the traditional insurance market feels less like a safety net and a lot more like a constant headache and an expense you just can't control. Does any of this sound familiar? You're essentially paying for some other company's massive overhead and, of course, their profits. You're stuck with these cookie-cutter policies that don't really get the unique risks of your industry. And when you do need help, well, you're completely at the mercy of their timeline and their rules. It's a feeling of being totally powerless. But what if you could just flip that entire model on its head? This brings us to a fundamentally different way of thinking: captive insurance. This is the point where you stop being just a passive customer and you start acting like the owner of your own risk. Okay, so what is it, really? At its heart, a captive is basically your very own insurance company. Instead of writing massive checks to some external corporation, a business creates and funds its own licensed insurer to cover its own risks. It's all regulated, it's sophisticated, and it's a really powerful form of self-insurance.
Here's a simple way to think about it. Instead of throwing your money into someone else's giant pot, you're building up your own reserves, tailored specifically to what you need. And here's the best part. Any money that doesn't get paid out in claims, it stays with you, earning interest, instead of just becoming profit for somebody else.
And in case you're thinking this is some weird fringe idea, think again. Over 90% of Fortune 500 companies use captives. This isn't some kind of loophole. It's a cornerstone of modern risk management for the most successful businesses on the planet. So where did this whole idea even come from? And more importantly, how does it all work in the real world? Let's take a look.
You know, this whole concept was actually born out of pure necessity, way back in the 1950s. There was this steel company that was just fed up with high costs, so they worked with a guy named Frederick Reese to create the very first captive insurer. The idea was so good, so effective that it just spread like wildfire. And today, it's a global multi-billion-dollar industry. So how do you do it? Well, first, you legally form the insurance subsidiary. Then you fund it with premiums just like you would a traditional policy. That captive then gets to work actively managing your specific risks. And this is all done under strict regulatory supervision. And for those huge catastrophic what-if events, the captive usually gets its own insurance policy, which is called reinsurance.
Okay, I know this all sounds pretty incredible, but let's be real. A captive isn't a magic wand. It's a very serious financial commitment, and it comes with both game-changing benefits and some pretty significant challenges.
And here it is, the trade-off. The benefits? They're huge. You can save a ton of money, design the perfect coverage for your needs, and even turn your insurance from an expense into a potential profit center. But the challenges are real too. It takes a lot of capital to get started, you have to navigate some pretty complex regulations, and this is a long-term commitment. Definitely not a quick fix.
Theory is one thing, but let's see how this actually plays out in the real world. I want to tell you the story of a fictional retail chain. We'll just call them Brightmart. So this was the situation at Brightmart. They were a retailer with a great safety record, but they were still getting charged a fortune by insurers who just lumped them in with a bunch of high-risk businesses. And even worse, their generic policy didn't properly cover their single biggest risk, customer slip-and-fall incidents. They were overpaying and they were underprotected.
So they decided to take action. They established their own captive. And instead of that useless one-size-fits-all policy, they designed coverage that precisely matched their real-world risks. For those slip and falls, they set their deductibles based on their own data, not some generic industry average. That meant they were paying for the exact level of protection they needed, and they could manage claims directly and way more efficiently. And the results? It's pretty amazing. A staggering $2 million saved in just 3 years. Now, that money came from cutting out the third party's profit, from investing their own reserves, and from no longer overpaying for coverage that didn't even fit them. They literally transformed a deadweight expense into a strategic financial asset.
Now, the Brightmart story is powerful, for sure, but it leads us to the most important question of all. Could this actually work for you? It's definitely not for everyone, so let's break down who the ideal candidate is. So here's the bottom line. Captives are generally best for larger companies or businesses that have really unique risks that the traditional market just won't cover well. Think about industries like healthcare or construction that face absolutely massive insurance costs. It's probably not a great fit for a small business or for anyone who's just looking for a simple, short-term solution. You know, when it's all said and done, it really comes down to this one idea. Captive insurance is more than just a financial product. It's a whole philosophy. It's about refusing to just be a passive price taker and instead choosing to actively manage your own risk to shape your company's future. So the final question really is for you. Is your business playing defense, just reacting to the market? Or are you ready to take control? That's a powerful thought to end on. Thanks for joining me today.